From Forex Traders Daily, this is your daily analysis with Ross Mullins, live from Richmond, Virginia.
Hello everyone, this is today's video analysis for November 28th, 2017. Today we're going to take a look at the GBPUSD Great British Pound versus the US dollar for today's trade analysis. First off, let me zoom out a little bit here so we can see the full trend that has been in place for quite a long time. We're going all the way back to the beginning of this year, January, February, March, where we started, all the way down here at the bottom left-hand corner of the screen, and have been moving up ever since. You can see the blue trend line even representing that uptrend, higher lows and higher highs. Even the 100 period moving average, the green line coming in and paralleling along that blue trend line. So we can see it's been an uptrend for quite a long time. Let's zoom back in one time, and we can see last week or past couple of weeks we tested and challenged the 100 period moving average trend line and bounced off it, coming right back up into the 1.3315, 3340 level, the pink shaded area, top of the black box. We've seen a number of retests of that pink zone. Let's go ahead and zoom it in one more time here. I'm just going to draw out a couple of circles here to highlight a few areas. You look right here, you can see resistance at that pink zone, 1.331540. Let's draw another one out not too far after that. You can see some further resistance right there at that 1.331540 level. So we know that historically this is resistance, and now for the past 4 days, not including today, 1, 2, 3, 4 days have found resistance at that same area into the 1331540 level, becoming a point of decision for us. One of two things is going to happen here at this pink shaded area. It's either going to continue doing what it's been doing, which is bounce off of it as resistance and turn back lower, or it's going to break through it and continue to go higher. Well, as we could see for the past 4 days, it's had a very difficult time breaking through it. Even today, it even challenged just above it. Today's high is 133.57, so close to 60, but just above that pink zone. So it's 4 days now, the fifth day unable to break through there. So yesterday we saw a pretty strong move all the way into the 3380 level and a sudden reversal, a sudden infusion of sell orders. We often talk about that in the trade room as a clue to selling pressure, a sudden infusion of sell orders. So it gives us some opportunity to look for a short underneath the pink shaded area, targeting the next level of support happens to be the green shaded area, 3240, 3210. Beyond that, we could even see it all the way down here to the bottom of this black box in the range that we have been discussing, the orange shaded area, all the way down into the 1.3000. So that would be a significant target if it bounces off the pink zone like it did these last two times, by the way, and goes all the way down to the orange shaded area underneath the 3100 level. So we'll keep an eye on that. So to get our best risk reward opportunity, if we're going to go short, we often want to do that on rallies into resistance. So obviously for the past 4 days, the best place to go short would be as close as possible to the pink zone, 3315, 3340. And the risk there is, again, that it breaks above the pink zone and goes higher. So we limit our risk by waiting for a rally, a retest back into that resistance level, back towards that pink shaded area. So the closest we can get there, the closer we can get to that pink zone for a short, it limits our potential risk. So what I'm looking for actually today, not selling at the lowest low, but selling on any retest coming back towards 133, 133.10, 133.15. Any retest of that orange, or sorry, the pink shaded area becomes an opportunity to go short, targeting the green zone or lower. It may not do that. Now, obviously, the possibility is that it just continues to pressure lower. It doesn't make that rebound, doesn't make the retest. So we want to watch for that opportunity. Now, I often don't take a short at the low because that means our risk is too high. Because right now, at least I would say your risk is up here close to the intraday high, the daily high for the day today, which is closer to 133.5560. So if your risk is 33.5560, right now you're risking, let's see, 80 to 90 pips, 80, 85 pips if you were to sell now. But if you wait for it to rally back up to the 33.10, 33.15 level, then you're cutting that risk by quite a bit. Then you're looking at a risk closer towards the 45 to 50 pips. So again, what I'm expecting to do is look for a little bit of a bump its head into that resistance, as it has for the past 4 days, targets back down towards the green zone or the blue zone or the orange zone as it turns back in the other direction. Something else that we looked at during the trade room yesterday is this trend line right here. Very interesting is that today we are pushing underneath that trend line. So again, a classic pattern of a breakout of a trend line would be a push underneath, a retest, and then the next fall. So I'm looking for that. Coming back underneath the pink zone, coming back underneath the black line, trend line, giving us a better risk reward, and then we target the green zone or lower for the pound dollar over the next few days.
From Forex Traders Daily, this has been your daily analysis with Ross Mullins. If you would like to get Ross's analysis on all the currency pairs he's watching and all the trades he takes today, join him in his live trade room by clicking on the link below. Please leave any comments you have about today's video in the comments section below.